This is video 3 of 6, starting on page 7 of the Exam 1 Study Guide. This video will cover Chapter 13, Conceptual Content. Chapter 13 will be worth 30 points on the exam, with 16 points for multiple choice, 14 points from the written question. These multiple choice will span a few conceptual and several ratio analysis calculation questions. Let's start with our concept guide. So you need to know what horizontal financial statement analysis is. Remember that it is looking at how account balances have changed over time or across time. So because it's worried about calculations across time, you will see a calculation of the change. So the dollar change between two periods, current minus prior, over the prior balance. So how much did it change since last year? Last year is your basis, so last year is the denominator. So dollar change over the prior balance. If it is negative, so if it's decreased, you want to make sure that you include a negative sign or that you put the percentage in brackets to indicate negative. Vertical financial statement analysis involves taking every current account balance and dividing it by some aggregate on the financial statement of interest. So for the income statement, it's total sales, the balance sheet, total assets. But it is a vertical analysis in that every item in a single column. So if I were looking at like this data, for the income statement is total sales, I would divide this by this. Cost of goods sold by sales. Gross profit by the sales for that year. SG&A expenses for the sales that year. Basically, every calculation is using numbers within the same column. If it was horizontal analysis, I would use numbers in the same row. So horizontal analysis, I would take 678 minus 563, take that difference, divide by 563. The numbers I use are in a row or horizontal to one another. In horizontal, where they're vertical to one another in vertical. So the basis or the denominator for the analyses depends on the statement. Income statement, looking at total sales, balance sheet, total assets. Vertical statements are also known as common size financial statements because they are all divided by common term or aggregate, or basically they're all divided by the same number to put in some common terms. If you're doing a vertical analysis, you need to pay attention to what statement you're on so you know what basis is appropriate. If you're on the income statement, you're taking the current account balance divided by total sales or revenues. If you're doing the balance sheet, divided by total assets. Okay. We will pick back up with video 4 in the next video, or on page 8. And we will deal with the chapter 13 application questions in that video.